Hello, this is JC De Guzman, and this is our top 5 gainers and top 5 losers analysis for May 8, 2019. Most of the 10 stocks that I'll be discussing today are index stocks, and we will begin with BDO. BDO closed on Wednesday at 139.9. Let's find out if the four rule criteria are present or present is present. So first, it's a green candlestick, check. It closed above the VWAP, checked. It got a bullish volume that is higher than the 50% of the 10-day volume average, check. So 3 out of 4 are already present. A few later on, we're going to check the trade and volume distribution chart. MACD is also bullishly moving above the signal line. Support is at 123.9. Resistance is near, let me adjust this. Resistance is near 140.70. So it's much closer to the resistance than to its support level. So new entrants, those who are planning to enter a new position in BDO, calculate your reward to risk ratio, please. Now, let's see. If it break above 140.70, the next resistance would be near 157.2. Okay? Now let's take a look at the trade and volume distribution chart of BDO. So the most traded and most voluminous range is actually closer to the intraday low than the intraday high. It's between 132.5 and 133.5. And the second to that is 133.7 to 135.7. Okay? It's just that BDO managed to recover yesterday at 139.90. It managed to recover at 139.90, but this is the most traded and most voluminous range. This one that's closer to the intraday low than to the intraday high. So, if BDO will show us another flimsy price action on Thursday, watch out for the price movement between 132.5 and 133.5. Okay, so nonetheless, in the short term, since this video is for short-term trading purposes, for the short-term trading, I am bullish on BDO, but I would suggest that you consider locking in some profits near 140.70. Okay, near 140.70, so that just in case the price will bounce away from 140.70, you already lock in some profits for a few tranches. You know, for the few tranches that you've sold near 140.70. If it decides to continue to go up, at least you still have some cash, not fresh from the pocket, that you can use to buy more shares of BDO. Okay, that's my advice for those who have BDO. Now, for those who don't have BDO, I strongly suggest that you calculate your reward to risk ratio first. If you're happy with your reward to risk ratio, then you can do a test buy, not at any price, but within the most traded and most voluminous range. Those two ranges that I showed you a while back, monitor those two this Thursday. So there you go for BDO. Moving on to JGS. JGS closed on Wednesday at 65.8. I am seeing a perfect bullish alignment among its three SMAs. MACD is also moving bullishly above the signal line. It did not continue to register a death cross below the signal line. It bent upwards. Okay. Now let's check if the four rule criteria are present. First, it's a green candlestick. Check. It closed above the VWAP. Check. Let's see the volume. Volume is higher than the 10-day volume average of JGS. Check. Now let's take a look at the trade and volume distribution chart of JGS. Okay, so here, the most traded and most voluminous range is still closer to the intraday low than the intraday high. Meaning to say, just like BDO, JGS did a last-minute recovery toward its closing price of 65.8. It was forced closed. Okay, the most traded, most voluminous range is between 61.35 to 61.75. So, if in case JGS will give us another flimsy price action, like BDO, this Thursday morning, monitor that price, that range that I showed you a while back. But for short term, my short term rating for JGS is bullish. Okay, bullish for JGS. You may want also to consider locking in some profits near 69.60 should it continue to rise closer to that area. Okay, so it's logical to do a test buy. It's logical to do a test buy, but there's still a few percentage of hesitation in me. Why? Because our four rule criteria is not perfect. It's not perfect. We only got 3 out of 4. It was forced closed yesterday, just like BDO, like what happened to BDO. So maybe you can uh, reanalyze or do another trade and volume distribution analysis on BDO and JGS maybe after 15 or 30 minutes of trading, just to check if the four rule criteria are perfectly present already. Not just 3, not just 2, but all 4. Okay? Before you do a test buy. But I'm bullish on JGS in the short term. Same thing goes in the long term. Okay? Okay, there you go. Just because, it managed to recover yesterday. Now let's take a look at URC. URC closed on Wednesday at 165. There's support waiting at 159.6. Immediate resistance is now 167.30. Should it decide to break above 167.30, our psychological resistance would be in confluence, almost in confluence, not perfectly in confluence with the 61.8% of the up Fibonacci extension. And the psychological resistance is pegged at 183.2. Okay, so new entrants, those who are planning to enter a new position on this stock, bring out your calculator, do your reward to risk ratio. Okay, calculate your reward to risk ratio. MACD is moving bullishly above the signal line, and let's see if the four rule criteria are present, because our 10 SMA and MACD combo is already true. For the four rule criteria, let's check. Green candlestick, check. It closed above the VWAP of 163.10, check. Volume is higher than the 50% of the 10-day volume average, check. Now let's take a look at the trade and volume distribution chart. Let's see if it was also force closed. So remember, it closed yesterday at 165. Yeah, it was also force closed in the last minute after the market run off period. Nonetheless, the most traded and most voluminous range is between 159.5 to 160.9. So like what I said for BDO and JGS, should URC give us an anemic morning on anemic Thursday morning in terms of price action, watch out for this range that I cited a while back. It's closer to the intraday low than the intraday high. Nonetheless, according to these indicators, I am bullish on URC in the short term and in the long term scale. Just pay close attention to our four rule criteria, especially if you are still in the planning stage on whether or not you will trade the name. But if URC is already in your portfolio, okay, if it's already in your portfolio, consider locking in some profits near 167.3. May not be all of your shares, but just a few tranches if you are into short-term trading on URC. Okay, reminder, this video is for short-term trading purposes, not long-term. We have a separate table for long-term discussions. Okay, there you go for URC. Anyway, should you decide to enter a new position, do it within the most traded and most voluminous range and wait for the four rules to be present. So maybe after 15 or 30 minutes of trading on Thursday, do another trade and volume distribution analysis. If you don't know how to, I'm just a post away from our private clients forum. Okay, next we have CHP. CHP closed on Thursday at 2.36. Support is at 2.2. Resistance is near 2.9. I'm seeing a perfect bearish alignment amongst 3 SMAs, although the last candlestick is already above the 10 SMA and MACD is already moving above the signal line. So as far as our 10 SMA and MACD combo is concerned, it's already true. Okay, now let's check if the four rule criteria are present. Is it a green candlestick? False. Did it close above the VWAP of 2.39? False. Is volume higher than the 10-day volume average, the 50% of the 10-day volume average? Yes. How about the trade and volume distribution chart for CHP? Okay, so for CHP, the most traded and most voluminous range is between 2.34 all the way to 2.42. It's still closer to the intraday low than the intraday high. So it's bearish for me in the short term. CHP is becoming bearish. Although it's not yet, it's short-term bearish that is not yet confirmed by our technical indicators. I would like to preempt them by saying that I'm already um, on the Wednesday performance of CHP was a bearish day. It was a bearish day for CHP last Wednesday. But if your trailing stop loss has not been hit yet, you should be fine. Okay, just make sure that you do another upward adjustment once CHP registers a price higher than your trailing stop loss. Okay, so if you don't have CHP, do an observation within the first 15 to 30 minutes. Do another trade and volume distribution analysis. If all four rules are present, then you can do a test buy within the most traded and most voluminous range. Okay, now let's see MRSGI. MRSGI closed on Wednesday at 2.76, and let's check. MACD is already moving bearishly below the signal line. RSI is approaching the classical oversold level. Maybe that's somewhere near 2.53. That's the support level. Resistance is at 3.11. Should it recover above 3.11, that will make 3.60 as our resistance level for MRSGI. Note that the foreign investors also sold a significant amount of shares on Wednesday, amounting to 26 million pesos worth of shares. And let's check the four rule criteria. Green candlestick, false. Did it close above the VWAP of 2.81? False. Is it a green volume above the 50% of the 10-day volume average? False. Okay, it should be a green volume, by the way, not just any color of volume higher than the 50% of the 10-day volume average should be a green volume. So I think a while back I said yes for CHP's volume should be false. Okay, going back to MRSGI, let's take a look at the trade and volume distribution chart. Okay, let's see if it was also false. Closed yesterday 2.76. No, it wasn't. It was really a bearish day for MRSGI on Wednesday. The most traded and most voluminous range was registered between 2.71 to 2.85. It's official. It's closer to the intraday low than the intraday high. So it was official that Wednesday was a bearish day for MRSGI. It's all the more that I would advise you to wait for the dust to settle down near 2.53, closer to that area. So if you have MRSGI, please exit as soon as you can. I do hope you're not yet to exit, but I do hope you already exited from MRSGI. If you don't have MRSGI and you're eyeing this stock, wait for the dust to settle down near 2.5 or even lower if the bearishness continues with the bearish volume. Next, we have GTCAP, another index company. GTCAP closed on Wednesday at 8.55 per share. Support, it's super close to its support level. Support is at 849. Resistance is at 1040.80 or 1041. It's now moving below the 10 SMA. Okay, MACD, while it's already moving above the signal line, I'm already seeing a formation of a bearish convergence with the signal line. It's still a formation, not a confirmation. Okay. Nonetheless, on our DMI histogram, directional movement index, the negative DMI is already rising. It's already above the positive DMI, and the average directional index, the indicator for the strength of the current direction, it says that it's a strong downward direction for GTCAP. Okay, do we still need to check the forward criteria? Okay, for what it's worth. Is it a green candlestick? False. Did it close above the VWAP of 867? False. Is volume green? False. Okay, 3 out of 4 are false. Let's take a look at the trade and volume distribution chart. Did it do a force close yesterday? Let's find out. Oh, it did not. Still, the most traded and most voluminous range is closer to the intraday low than the intraday high because it was between 855 to 862. 855 to 862. So I suggest that you wait for GTCAP to break below 848.90 or 849. Wait for it to break down, or wait for it to, it's not impossible for GTCAP to translate this support level as a rebound zone. So how would you know if it's treating this level as a rebound zone? If the four rules are present: green candlestick, last price is above the VWAP, it's a green volume that's higher than the 50% of the 10-day volume average, and lastly, the most traded and most voluminous range is closer to the intraday high than the intraday low. Okay, so if those four rules are present, it's a confirmation then that GTCAP has translated 849 as a support level. For now, I'm bearish on GTCAP. Don't enter just yet, and if by now none of you should still be holding on to GTCAP on a short-term trading purposes. Okay, don't trade GTCAP for short-term yet, not for now. Okay, next we have FGEN. First Gen Corporation closed on Wednesday at 20 pesos per share. It's now closer to its support level than to its resistance area. Support is near 19.48. Resistance is at 22.48. MACD has been moving bearishly below the signal line, not just on Wednesday, but since April 26, 2019. FYI on that. FYI to that. The DMI histogram also affirms or confirms the bearish trajectory of First Gen in the short term. Let's find out if the status of our four rule criteria. Is it a green candlestick? False. Did it close below the VWAP of 20.31? False. Is it a green volume? False. Let's take a look at the trade and volume distribution chart. Let's see if it also force closed. I think it did not. The most traded and most voluminous range is between 19.92 to 20.2. That's the closing price is within that area, and it's much closer to the intraday low than the intraday high. So in the short term, I'm perfectly bearish on FGEN. I'm bearish on FGEN. Don't trade this name just yet. By now, if you bought FGEN near the support at 19.48, you should have already locked in some profits near 22.5. So if you're planning to trade the name for a new entry, don't hurry. Wait for a pullback near 19.5 or lower. Okay, DMC. DMC closed on Wednesday at 10.80. It broke below its previous support at 11.15, and that now is acting as its immediate resistance. The new support is positioned near 99.86. I'm already seeing a perfect bearish alignment among the three SMAs of DMC, FYI to that. And foreign investors have been on a selling spree for the past 19 trading days. So on Wednesday, they sold about 25 million pesos worth of shares. MACD has already been moving bearishly below the signal line, not only on Wednesday but since April 24, 2019. Our DMI histogram also confirms the bearishness of DMC. Shall we find out the status of our four rule criteria? Is it a green candlestick? False. Did it close above the VWAP of 10.99? False. Is it a green volume? False. Yeah, well, the fourth criterion is most likely false as well. Well, what was the closing price on Wednesday? 10.8. Let's find out if the most traded and most voluminous range is closer to the intraday low than to the intraday high, and I think it is. So the most traded and most voluminous range is positioned between 10.8 to 11.04. Okay, 10.8 to 11.04. It's closer to the intraday low than the intraday high. So that confirms my bearish overall sentiment for DMC. Don't enter just yet, not yet. Wait for a pullback. Uh, Monitor if DMC will retest the support level near 9.86. Okay, I do not see a midterm support level between this between 9.86 to 11.15, by the way. Okay, next one we have Maxes. Maxes closed on Wednesday at 14.6. Support is at 13.9. Resistance is at 16 pesos per share. Although the three SMAs are still perfectly aligned in a bullish position, the last candlestick already dove below the 10 SMA. Okay, so if you are monitoring our 10 SMA MACD combo, realize that that combo is already false. It's not just about the 10 SMA, the price of the position of the candlestick below the 10 SMA, but also the position of the MACD line below the signal line. MACD has been bearishly moving below the signal line since May 7. Not just May 7, I think. Maybe until earlier than that, May 6 perhaps. And on our DMI histogram, the negative DMI already crossed above the positive DMI. So that's a switch of um, direction. Okay, it's a switch of the strength of the bearish direction for maxes. So let's take a look at the status of our 4 rule criteria. Is it a green candlestick? False. Did it close above the VWAP of 14.8? False. Is it a green volume bar? False. Let's check the trade and volume distribution chart. What was the last price on Wednesday? 14.6. So the most traded and most voluminous range is between 14.3 to 14.6. It's closer to the intraday low than the intraday high. So in the short term, I'm bearish on maxes. You should have already considered locking in some profits near 16 pesos per share. You got two clues last May 3 and May 6. Those were two attempts to break above 16 pesos per share, the resistance level, but both attempts were unsuccessful. So you should have already translated that as a clue that Maxes was having a hard time. It was having a hard time breaking out above 16 pesos. So you should have already locked in near that resistance area. If you don't have Maxes, wait for a pullback near 13.9. I am bearish on Maxes. Last but not the least in our list is IDC. IDC registered a tall red candlestick as it engulfed the entire candlestick of the previous day's candlestick. It closed at 5.11. Support is at 4.35. Resistance is at 5.80. Okay. MACD is still moving above the signal line, but I'm already seeing a formation of a bearish convergence with the signal line. Okay. RSI has already bent towards the southward direction too. It's the same thing that I see on the DMI's histogram. Okay, there seems to be a bearish convergence already between the positive and negative DMA. Okay, let's take a look at our 4 rule criteria. Is it a green candlestick? False. Did it close above the VWAP of 5.34? False. Is it a green volume bar? False. Let's take a look at the trade and volume histogram, trade and volume distribution chart of IDC. The most traded and most voluminous range is between 5.1 or 5.10 to 5.30. It's closer to the intraday low than the intraday high, and that confirms my bearish short-term rating for IDC. So I suggest that you wait for a potential rebound somewhere here, somewhere near 4.7. If the descent in price maintains its strength even below 4.70, then it's a clue that you should indeed wait near, let me adjust this one, wait near 4.3, okay, the support level. So 4.70 is a protection for 4.30. If it breaks below 4.70, it will then be more likely for the price to descend all the way to 4.30. All right. Don't enter a new position just yet. I do hope in the middle of the price action yesterday you already locked in some profits of your IDC near above 5.5 if you have IDC. If you don't have IDC, don't touch this stock just yet. Wait for 4.70 at 4.70 or at 4.31 or even below, depending on the strength of the bearish price action. So there you go for our top 5 gainers and top 5 losers analysis for May 8, 2019. If you do have follow-up questions, don't hesitate to ask inside our private clients forum. Again, my name is JC De Guzman, and have a profitable and a disciplined trading day ahead. Thank you. Bye for now.